The markets are going absolutely bonkers, and we need to talk about it. I am Dr. Stock, Doctor of Education, and you do not want to follow an egg into high-stress situations because they tend to crack under pressure. We're going to take a look at 3 ETFs that track the indices, SPY, QQQ, and IWM. IWM, by the way, super exciting. Big Tech will do a quick recap, and then I'm going to tell you about some of the plays that I'm tracking, and then at the end, I will tell you about some of the plays that I made and how they could possibly be shaping up. Lots of stuff jam-packed into this video. I will also tell you where you can see my buys and sells and how I'm playing this market, also about the options course that I'm constructing, and about how you can learn to do technical analysis like I do to learn to benefit in the markets. So let's pop up the charts from here, and we're going to kick things off with SPY. So what we're looking at here, I got a bunch of stuff going on this chart, and what we can see right now is that we have a rising wedge pattern that's happening for us. As a matter of fact, a smaller pattern that we have in here could possibly be that we're seeing an ascending triangle take place where we have this top right here, which is pretty much even across the top, and we are currently in the pre-market hours breaking up above that. That's very good. It could put up that green light to show us 485 like I've been talking about for SPY. When we go to QQQ, I said about green lights up to 420 right now. In the pre-market hours, we're rocking at about 416. So 420, by the way, is like right about up here where these two things meet. And we have an inflation report at the end of next week with the PCE that goes along with personal income and outlays. And then we have the Fed meeting happening the week after that. So that sets us up for a lot of pressure coming up in the markets, possible downward pressure. We have today at 10 a.m., we have Michigan consumer sentiment that we have to pay attention to as well. So we see the same rising wedge pattern here. And then what we're also seeing is in the smaller, shorter term, we're seeing that ascending triangle pattern that we have here, and we are currently up above that right now. That's a very bullish thing, and you can see we peekabooed up above it yesterday, and then today in the pre-market hours, we're actually solidly breaking that. So we'll see if 420 is the top of this thing. Should we break up above this trend line? We'd absolutely have room for more. As a matter of fact, we even have this little tail that we can count on here to boost us up from there a few extra dollars. Maybe we even see 430 to 435 come out of it. So over to IWM, this one very excited about because this blue line that you see is a retest right here of the 50-day simple moving average, and we found support there before. We bounced solidly off that, so even though we had a red candle, you can see that the buyers came in and really pushed up the close of that candle to almost go green on us yesterday. This is something that we could continue to see that upward pressure, especially if we break up above 192. This is one that we could have a strong recovery with the Russell 2000, and if we get news from the Fed coming out about sooner rate cuts, this is something that can also help us out here, and also positive inflation reports, things that really help us out by saying that inflation does continue to cool. We could see the Russell 2000 stocks really start to outperform, and we could have a significant bounce from here. I'm highly bullish on IWM. This is one that I have on my watch list, ready to go. As a matter of fact, I might make a bullish play on that sometime soon through call options, most likely. Let's just take a quick look at Big Tech. Apple still heading upward, closing in on that 190 mark. We'll see if it breaks above it. We have resistance, you can see with this previous peak that we have over here. Also the fact that we studied around it before, and then over here also came out to be resistance. We have a good move on the RSI. We are currently moving up towards just breaking above 50 today. Should solidly put us up above 50 on a daily basis. And if we got to the weekly chart on this, you can see we did take that bounce off the 50 for the weekly, and then it went with a lot of confluence with what we saw going back to the daily chart with the RSI. So this is actually a very strong move that we're getting from Apple. I say coming off the 200-day would be very strong support for us. You can see we retested it, and check out what happened after the retest. That's something that you should absolutely pay attention to, especially with things like the 50 and the 200 simple moving averages, such as what I have on here. Let's go over to Amazon. Amazon is in this ascending triangle pattern like a lot of big tech, and right now we're still rising up. And when we go to Google, you can see that same pattern. We're still inside of it. Meta right now is still operating in the same pattern that we have. Microsoft is actually right now in the pre-market hours just up above what we have in this ascending wedge pattern. So this is one that could eventually reverse on us. So we're doing a watch for that. And I do think that right now what we're seeing with a lot of big tech is that we are seeing a run up to earnings, which take place pretty much the same time as that Fed meeting that we actually kick things off, I believe, on January the 31st in the after hours. So we want to be watching for that. February 1st is a lot of other big tech. That's going to be a huge week for us, not only for us, but also for the markets. And if big tech is something that is pricing in extra positive, really good earnings ahead of time, then that's something that we could actually sell on the news of those earnings. So that day following, so February 1st and February 2nd, that Groundhog's Day, maybe it starts to see a little bit of a shadow coming up as it looks down. So we're going to have to look and see if that's when we break things, or if we get such bullish results that continues to catalyze us upward from there. As a matter of fact, I think the best case scenario right now, or I think the most likely, I should say, scenario that we have from this rising wedge pattern is that we continue to see that run up to earnings hit, and then we start to see things pulling back as we take profit on those. That is going to be more of a sell the news event for those earnings coming out. So let me put this back up here. We'll go over to Nvidia, and Nvidia has absolutely broken out of its bullish channel, heading off towards another part of the bullish channel. As a matter of fact, this trend line right here, we can even adjust a little bit more to see what's going on, and maybe we're starting to see the early signs, the early indications of a rising wedge pattern finally coming out for Nvidia. So if we adjust these trend lines as well to go across those bottoms, and then there it is. There's the shape that we're looking for, which really has a high. I mean, I can't even see it on my chart right now. Let me expand that, and we'll stretch it out for you. We'll see what it's pointing to, and looks like I need to zoom in just a little bit, and we'll pull the chart down. That point, that peak on that, and I don't think that we get there. That comes out to be like 640. So that's incredible, and that's astounding. As a matter of fact, I think that we actually could wiggle around in here for a little bit and then drop down, wiggle around in here for a little bit, and then we'll see if this happens to make a liar out of me that we do hit 600 before 500. I still think that we're going to hit 500 before we hit 600. We're going to have to watch out for Nvidia stock. Remember, it's going to trade with the market multiples. Right now, the market multiples are very high. Nvidia stock is also very high. I think this is one of the most anticipated stock earnings that we have. We're going to have a significant run leading up to those earnings, which is towards the end of February. So if we sell off in the near term, that could be a short-term trading opportunity in order to get into the market on Nvidia, one that I'm absolutely watching for that drop to take place. And I think that we'd have a secondary run up to earnings. The market bias is something we're also going to have to check along with that. Tesla has dropped out of the bottom of its formation in the pre-market hours. It continues to be down here. There could be a further drop for Tesla. The trouble with shorting right now is on a daily basis, we are in the oversold territory, which means that we could possibly get a bounce coming out of that. If we go to the weekly chart, this one for the longer term trend for the RSI, we're not in the oversold territory yet. We could continue to push down up to earnings. That earnings date, by the way, is Wednesday, January 24th in the after hours. And if you want to see my Tesla stock price prediction and earnings projection, you can do that over at the Patreon, which is also what you can access to see my buys and sells in the private Discord that are over there. So you can see how I'm playing the market that way. I also have my Nvidia stock price prediction and earnings projection that I will be updating for this most recent quarter this month. So that way, when that time comes, in February for those earnings, that you can be set up for it ahead of time, and you can include it as part of your due diligence in your research that you do. I also have an options course that I'm building out where you can learn how to amplify the power of your portfolio. And then also, if you want to learn more about technical analysis and have a very supportive community, I'm over there, Stock Mode's over there. Also, the other community members talking every day about the trials and tribulations of learning about technical analysis, talking about their successes, talking about their areas for improvement. And it really is just an incredible and positive place where if you're just looking for people to talk to really help you out and to really have that community surrounding you, this is the place to do it. And there's a massive discount going on right now. You can use the coupon code TRADE, TRADE. Trade. You can use that right now for massive savings. It only lasts for a couple of weeks yet, and then that goes away, and the prices do go up over time. So you're going to be watching for that as well. Let's get back over to the charts, and then at the end, I'll tell you a little bit more about that stuff. So in the charts here, there we go. We'll bring Tesla back up here. The lower we drop for Tesla, the more likely it is that we could possibly see a bullish move coming out of their earnings. We're going to have to listen to see what Elon has to say. With a drop in interest rates could certainly be a very good thing for the outlook for 2024. I think deliveries are the most crucial thing that we're looking for. Now, for the stocks that I'm looking at right now for possible moves on them, one of them is Zoom. And Zoom, this one, it's a big old question mark right now which way it's going to go. This line that we have right here, buyers keep coming in right at about the 66.50 line. So we'd actually have to see a move below 66.50. And what we could see from this descending triangle is a continuation pattern where we continue down off of this, and we could see a couple dollars come off of that price. Now, if we do retrace up from here, we have this trend line to meet, which would mean that we have a little bit longer to go on that. And if we break up above that, then what we have possibly on this one would be that an inverse head and shoulders pattern right here, but that's only if we start to break back up this way and we start to retest that neckline around 75. I will say that should we get back up to 75, I think this is one that could be a failed pattern. I am not bullish on Zoom long term. I think that this is one that there's just far too much competition. I think it's a very competitive space, and I don't know that they have a lot of reason to return back to their previous highs. So for Zoom, this is one that I would be looking for where that top is going to be, going to look for signs for further weakness. You can see when we keep on getting up to about $75 per share, we keep on selling off. So if we come back up here, that might also be another sell opportunity. They do have earnings coming up. Those earnings look like they're on the 27th of February. So at the end of February, we should expect those earnings to come out. If we do have a run up to earnings, that could be a wonderful time to sell off into those earnings. Now, mind you, the last earnings that they have were incredibly bullish. We came in low. So if we come in high on the next one, I think that we could swing back down low on that one. But that's going to take a little bit of time to watch it, but I am watching that one. A little bit more excited about what we see for Moderna. So we're looking at the weekly chart from Moderna, and we are right at the 50 for the RSI. I think it's a possibility that we actually bounce off of that and we actually have a strong recovery coming through Moderna. Now, if we go to the daily chart, we can see a little bit more. We are just starting to turn around just above the 50 EMA. Down here's the 50 SMA, and this trend line that we see right here coincides with what we have for the 50 SMA. So it is possible that we do sell a little bit more, taking us down to about the $88 mark, maybe $90 mark. Maybe we get the bounce there. It's also possible we get the bounce where we're at right now. If we do get that bounce, check out the RSI. We are just dancing right along that 50 line for the RSI. This is another one where we could see a significant recovery, and maybe this is the time that we actually break through this bearish trend line that we have right here. And then also what we have here is actually possibly potentially a neckline right at about 116. So I do think that for Moderna, that we could possibly see a bullish movement coming soon. And even though we're down below the 200, we are up below the 50, there might possibly be a golden cross moment coming for Moderna where we actually do break back up, retest the 200, where we actually start to really skyrocket through there. So I think there could be incredible opportunity for upside coming out of Moderna sometime soon. We're going to have to see if we start turning around and retesting the 200. I think that could be our first sign that we're going to break out of this thing. And especially if the 50 EMA that we have here in red holds for us, I think that could be a very good thing. I'm also watching Carvana. Carvana, very interesting. Let me reset the view on here. I think it's very interesting because we are currently bouncing. We found support right on the 50-day simple moving average. And then we're currently right now in the pre-market hours trading up above that as well. We're up above the 200, which you can see we found support there before as well. And so this, I think we could have a significant recovery. Now, there's a couple of things to watch. One is that we're possibly seeing the beginning of an ascending wedge on here. So we're going to be watching for that because there is potential that we get a bearish reversal off of that one. Now, some other things that I see when I look at this is that we actually potentially, and I think this is the more likely case that we have right now, is that we're going to start to see this inverse head and shoulders play out, and the neckline would be this top trend line that you see right here. So I think possibly we start going back up here. Now, mind you, check out that resistance right there at about $58 per share. Pay much attention to that. But I think it's also possible that we come up to about $68 a share again before we start to see this sell off. So I think right now we could be seeing a long movement, a long position taking place where we have that long swing going for Carvana and then followed by a short. Should we break up above this resistance and then hit resistance up here, I think that could be the opportunity for a sell on that, especially if we do expect weakness coming from the consumer sometime soon. That, by the way, puts us from where we're at right now out to where we have the cross on these, takes us out to June of 2024. So we'll see what we get from that. Now, I did zoom out a lot, and I want to bring this up, not that way. Another stray mark on the graph for Dr. Stock. There we go. I think that there's also a bigger part of this, and that yellow line is on there, and why I think it's such significant resistance for us from where we're at right now is that we actually have a bigger inverse head and shoulders that is possibly shaping up for us right now. Shoulder, there's the head, and then this whole piece over here is one big shoulder. And so that breaking that could actually be that neckline, and then finding further resistance up here. Maybe even breaking through it would even be a more bullish move in the near term. So we're going to have to watch and see what we get from that. But I think that it is getting to be a really good and exciting time for Carvana to take that swing back up the other direction that we're soon to see reversal. On a daily basis, the momentum, the RSI is still below 50. That's bearish. If we go out to a weekly basis on this, we're actually we're declining, nearing that 50. I think we're possibly turn that around, and we're going to stay bullish for Carvana in the next few days to weeks. So that's something that I'm watching. Now, I did tell you at the end of this, I'd tell you about two positions that I took. One is on Nike that I'm looking for that bounce off of 100 that I think that we could see a 9 to 15% increase from its price right now. So about 109 to 115. So I took a call option position on Nike. I believe that I used either the 100 or the $95 strike. And I have to go through and look at that. But this is one that I think is going to pay off significantly from the sell-off that it's been on. And so if we actually check out that sell-off, there we go. You can see where they were at around their last earnings, and man, this thing just plummeted, and I think that we're starting to see the beginning of an inverse head and shoulder, and then this neckline would be this line that we have declining here. As a matter of fact, we could even argue that that was just a very peaky moment. We even have one closer to about 113, which would be significantly up from where we're at right now. So 109 to 113, maybe 115-ish coming out of this, and should we actually push back up through that, which I don't know that I'm incredibly bullish to the point where we're going to see that much, but I do think we're going to see a strong recovery from Nike. And so that call option position should give outsized gains. If I'm correct about it, there is not a guarantee. The RSI is definitely way down towards the oversold territory for this one. If we go out to the weekly chart on it, we are just now crossing over the 50 into bearish territory. So if we're playing this from a momentum standpoint, right now the momentum is saying, hey, now's not quite the right time, which means that I'm possibly early on it, so you got to be careful with it. But we are also near critical support right around $100 per share, and I am looking at also the doji candles that we have in here that could signal a reverse as well. And so we'll see what the pre-market gives us right now, trading at about 101, and we'll see if we get that recovery coming for us. And it is possible that we're at the beginning of a descending wedge pattern on Nike in the near term. So when we look at this, we have across the tops here, and then we have across the bottoms right here. And so what could happen is we come back and retest this, and we'll see if we bounce around or not. So we could get up to like 104, 105 before starting to turn back around and retesting 100. A second retest and a bounce, keeping that as support, would be even stronger confirmation for me that I'm positioned in the right place. Now, the other play that I have is Trade Desk, and this is another one. I'm playing the double bottom that we have right here shaping up for us. And I'll make that bigger on your screen for you. There we go. So this potential double bottom that we have right here, that we did peekaboo down below the 200-day. We are down below the 50, but it's getting the 200-day as support for us. We had it before, we had it again, and we're seeing buyers. I'm sorry, that's a 200-week that we're looking at, which is even better for longer-term trends, that buyers keep on coming in right at about $60 per share. And I believe I used a $60 strike on this one. I wanted to go deeper into the money for a little bit more insurance, just in case I've mistimed this a little bit. And I think that I took the March expiration for both the Nike play and the Trade Desk play. But this is one that I think is going to have a significant bounce for us coming up in the near future. So even though we have bearish momentum right now, when we go to the daily chart out here, also bearish, just coming to that oversold territory. And you can see we took support right off that long-term trend line that we have right there, that I think that that's going to be a significant support for us. And then we're going to bounce off this double bottom, and we'll come up and we'll retest the bottom of this 200, possibly about $73, $74 per share. All right, so let me wrap this thing up for you. So SPY, clear green lights, possibly up to 485, maybe even higher. Can we see 500 out of this? That, I think, is going to be a very strong line in the sand for us, just so that everybody knows that if we climb even higher than even I expect, I think that when we see SPY hit 500, we'll start to see things start to soften significantly and turn around. And then for QQQ, 420, maybe, possibly, depending on how strong of a move we get, we see 430 to 435 come out of that. And I think that from there, we might start to see some weakness really come in. IWM with the Russell 2000 stocks, those small cap stocks that we have, I think we're going to see a significant bounce from that in the near term. I think that's a very nice short-term bullish play to take advantage of, and I think that I'm going to. And then BigTech, keep watching that. We have a lot of ascending wedges in that, which can lead to a bearish reversal. So we're going to have to watch and see where the top is for each of those. And then Tesla, stock price prediction, earnings projection available at the Patreon right now. And Nvidia stock price prediction and earnings projection coming very soon with the update of it. I already have last quarter's. I'm going to update it for this quarter, and it does go all the way out through 2028. So there's a lot of forward-looking information from there. As a matter of fact, you can even look and see already what I said for 2024 before I make the adjustments for this upcoming quarter. And then my buys and sells also through the Patreon, the Discord that's part of that. Go ahead and take advantage of that. The technical analysis trading course, if you want to amp your trading game through the power of technical analysis, you can check out that link down in the description. Make sure you use coupon code TRADE, and that Discord that's there is its own Discord. It is not mine. It is Stockmo's, and watch his live streams if you haven't. He does live trading in front of you, day trading to show The technical analysis really does work, and you can be consistently profitable with it when done correctly. So thank you guys for watching. I really do appreciate it. And as always, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.